Fox Business Alert, arguably the stock story of the day is CoreWeave, despite reporting better than expected third quarter results. Try a 134% spike in sales year over year. Shares are tanking about 16%. The firm is an AI infrastructure provider that outfits data centers with servers that are jam-packed with NVIDIA chips for companies including the hyperscalers in the AI race, Microsoft, Meta, and OpenAI, among a whole bunch of others. But why is the stock down? Well, CoreWeave lowered the top end of its full-year revenue guidance by about $200 million. CoreWeave says a third-party data center is behind schedule, and that impacted the forecast. Is that enough to send the stock down 16%? What are people worried about? Well, let's hear what CEO Michael Intrator has to say in this final hour of trade. Okay, so it's pretty much at the lows of the session here. A rough day, certainly, but explain to people the issue here. It's one data center provider that is behind on what? Its construction?
Yeah, so look, when they're talking about the data centers, they're talking about these unbelievably large construction projects, right? Like, you know, they require thousands of different tradespeople coming in to work on, you know, the concrete, the building of the walls, the delivering of the cooling, the plumbing, all of those pieces. And they're just at a massive scale. Mm-hmm. And when you're building something at that massive scale, and by the way, that exact same construction project is taking place down the road across another state in another country all simultaneously, which is what is occurring across the AI infrastructure build-out, you're really putting tremendous stress on the supply chains. And when you put tremendous stress on the supply chains, the speed with which you are delivering the infrastructure will periodically get disrupted. And that is what occurred this quarter for us, is that we have these data centers that are going to be delivered through Q4, and some of them are going to get pushed into Q1. It's important for everyone to understand that we didn't lose any of the contract value associated with the ultimate client. Those contracts are just going to shift back with the delivery of the data centers. And so, you know, we maintain our revenue in the long term. It's just being delayed by one quarter.
Your servers, which you rent out, which are jam-packed with these AI chips that NVIDIA makes that are in huge demand, those are all ready to be moved in, correct? So it's called the powered shell that's the issue. Explain that to our listeners.
Sure. So when you're thinking about a powered shell, what you're really talking about is the four walls of the data center. You're talking about the electricity delivery and distribution system. You're talking about the internal cooling mechanics, which is quite complicated and extensive within a data center that consumes this much power. You're talking about the air movement through the facility and air handling and all of those kind of mechanical components that allow the data center to receive the servers that ultimately are configured into the supercomputers that allow for the training and delivery of artificial intelligence. It's the physical part of it that has caused the delay.
Anybody who's ever done a renovation or tried to build a house, that's the thing, Michael. There are always construction delays. So can you confidently say that the only company that is affected or that will be affected by this is CoreWeave, or are there other partners down the line who are also waiting on this?
So look, we believe, and I think this is going to be echoed across the space, that the challenges that we are encountering, the challenges that the data center providers who are third-party providers of infrastructure to us are encountering are global supply chain level problems. And so you're going to feel that throughout the system. What we have done as a company to mitigate the impact of the supply chain challenges and the delivery of this infrastructure is we've built an organization internal to CoreWeave whose entire purpose is to be able to build this infrastructure on our own. So in addition to the third-party providers of these powered shells, we are building from the ground up data centers to be able to support our internal needs. And by cultivating that skill set and that muscle within the company. We're able to put boots on the ground at the third-party providers, data centers, to ensure and mitigate to the greatest extent possible that we don't encounter these type of delays again.
You know, we've had Supermicro on. They're doing the same thing. They're tired of having a patchwork of all different companies putting together a data center. They want to do it soup to nuts. But, you know, I guess you would figure that as you're trying to build this out, there is such incredible demand. You talked about it on your conference call last night.
Yep.
I mean, searing hot demand. You don't see any slowdown in that at all?
No, there is no slowdown for it. And you know, like when I think back on this quarter, in spite of what we've seen in the market, this has been an incredible quarter for CoreWeave. Like, we have gone about driving massive diversification within our client base. We started out this year when you know, and then went through the IPO with 85% concentration on a single client. We've now driven that down to below 30% or 35% to a single client. We have increased our backlog up to $50 billion, $55 billion. That is the, you know, getting an RPO up to $50 billion at the cloud. We've done that faster than any cloud in history. Like, the build out of our software, we just won a third-party analyst came in and did an assessment of all the different solutions for how you deliver compute to artificial intelligence. And for the second year in a row, we are the single winner of the platinum level of award. We've just had such an incredibly accretive quarter, and we've accomplished so much and driven so much of our company forward that we're really excited about this. And we understand that this is a setback, and clearly the market is working through that. But in terms of where the company is and where the demand is in this market, it's just incredible how much demand there is for the resources we deliver and the product that we deliver.
Well, don't get mad at me for asking this. Is that third-party group, is that Core Scientific?
So we're not really going to talk to you know, which data center providers. What we will say is that we have done an incredible job diversifying our data center providers. And so one of the ways that you mitigate problems is, you know, now there is no data center provider that provides more than 20% of our total capacity. And that's really how you go about ensuring that you're going to have the broadest possible infrastructure that's going to be supported by the largest number of different players.
Michael, I appreciate you coming out. I mean, it's a tough day. This is what CEOs who are tough do. So we'll see you next time, for sure.
Thank you very much.
Michael Intrator.